Do you want to learn Elliott Wave theory? Well, if so, consider joining the Green Star Trading Patreon at Tier 2 or Tier 3. You will unlock this playlist, 14 video part series teaching you Elliott Wave theory from scratch in a simple and easy to follow manner. You'll also get access to other playlists such as the My Chart series showing you how to set up my chart the same way I do, with the same indicators and tools configured the way I use them. Also, I've now got a second series of this which will cover all of the classical analysis techniques I use. We've started with episode 1 part 1 and part 2, support and resistance, but we'll be covering volume profiling, candlestick patterns, indicators, all sorts of things to come over the following months. I also have my deep dive videos as well, which I'm now currently doing a second part of a new one which will be uploaded to here soon. And I also have a trading playlist showing you how to use the standard trade setup, the STS, and a little bit on psychology and risk management as well. You can unlock all of these things by becoming a patron today at either Tier 2 or Tier 3. There are some other benefits to joining Tier 3, or you can just support the channel at Tier 1 for a £5 a month. Either way, I'm not going to read it all out to you. Follow the link in the description box below of the video you're watching now. Come over, have a read for yourself, and if you want to sign up, please feel free to do so. I would always recommend signing up at the start of the month so you get a full month's value for your subscription before Patreon charges you again. Alright guys, let's get back to the video. Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right then, I'm starting something new here on YouTube and I'm just going to explain to you what the long-term plan is. We've got several new things I'm going to cover, but we're going to start by going over the top 5 by market capitalization stocks in the S&P 500. So Apple, Microsoft, Google, Tesla and Amazon. And the idea will be we will eventually end up with a video each week where we can cover all 5 briefly, probably 10 minutes, 5 minutes per stock in one video, which will be time stamped. And that's going to be a feature on the channel going forward, but it's going to take some time to get there because what I've got to do first is introduce you to each of my counts for each of my charts for these, get them up to date, give you an overall understanding of where I think we are per stock, and then when we come to update the short-term information, it's going to make a lot more sense and I won't have to backtrack, and you can always come back to one of these earlier videos and look at the long-term analysis. So we're going to start here with Apple today. And then next week we'll probably look at Amazon, and then we'll look at Google, Microsoft, so on and so forth. So within a couple of months' time, we'll be at the point where all charts will be up to date, all long-term counts will have been explained, all of the individual videos will have been done, and then we can include it in a weekly roundup of all 5. That's the plan. So let us know what you think about that in the comment section after you watch this video, if you like where we're going with this. But the basic idea will be you'll be able to come back to these initial videos, look at the long-term analysis, and then the weekly updates from that point. Another thing I'm going to be introducing probably towards the end of the year, maybe next year, is we're going to start looking at market sectors as well. So we're going to be looking at financials, we're going to be looking at healthcare, utilities, energy, you get the idea. And we're going to start filing stocks into those different categories as well, and we'll look at the major ETF sectors as well. So basically over the coming year, looking to introduce a lot more content to the YouTube channel. Right then, without further ado, let's get underway. Okay, so here we go on the weekly time frame looking at Apple. We're in log scale because it's the only way we can really make sense of the entire chart's price history. We've had over 6,500% growth since the GFC, so exponential growth asset we're looking at here. So we're going to switch into log, stay on the weekly time frame, and I'm going to run you through essentially the procedure I use when working with a brand new chart. It won't be as in-depth as what I do on the Patreon, but it'll give you a solid idea of what I'm looking at and how I start to establish things from scratch, basically. So I've gone back and recounted a lot of this and done a lot of work. And I'm doing the same for Amazon, I'm doing the same for Google, and I really want to get everything up to scratch so that we can consider multiple ideas in the future and then do our weekly updates with the shorter term price data. So first thing I like to do is I just like to bring up the moving averages here. Very simple stuff to begin with on the weekly, and we're looking at the 60 through the 250 EMAs. And I'm just looking for the extended time periods where we fall below the 60 exponential moving average, on the weekly. So here we can see another big break of it here, break of it here, break of it here, break of it here, tiny one here, and a little one here. Okay, so we can see essentially coming back to the 250 on the weekly, coming through the 250 on the weekly on some really nasty big corrections here and here. We've gone through one little bit here, but we haven't done that again since. We've touched it here, we've got close to it here. So I've got an idea of just eyeballing it, the scale of these various corrections going forward in time. So to help make more sense of that, the next thing I do is look at these corrections in time, and I look at these corrections in price as well. So let's have a quick look at these corrections in time. So this first one, because I'm looking at the number of swings here to identify what I think I'm looking at, I don't see a straight 5 down, I don't see a clear diagonal, I don't see a clear zigzag, so I've got this as a combination, and we can explain that with the count later. But either way, it's 3,738 days in length. Even if we took it from here, it would still be a significant period of time, much greater than anything that follows. The next biggest correction, where we can see these moving averages broken significantly and back tested, we can see 1,120 days. And then moving forward to the test of the 250 here on the weekly and the break of the 60, we get 393. Moving forward to the next bigger correction, we get 210. Moving forward to the next is 91 days. Moving next is 56 days. So very clearly, you can see how these corrections are essentially shrinking over time. Now the next thing we want to look at is the corrections in price. And let's just remove the time here, and what we can see is, again, a bit of a pattern going on. 82.59% decline, 83% decline, 61.47% decline, 45% decline, 39% decline, 35% decline, and depending on whether or not we think this is complete, we're not sure yet, we've got a 27% decline. Either way, once again, getting smaller in time, getting smaller in price. So now we've got our moving averages on here, we've identified these big pivots, and then we've identified the length of them and the scale of them. That's essentially where I like to start. So this gives me the most basic framework I need to start labeling something and to start thinking about how I'm going to express this data as a count. Okay, because we all know, those of us who've been practicing Elliott Wave, that larger wave degrees take longer to correct, smaller wave degrees take less time to correct, smaller wave degrees yet take smaller time to correct, and so on and so forth. So now that I've got these measurements in place, I can come back to the linear chart and I can have a look at how over time corrections shrink in time and size, but the price accelerates violently higher. So a very simple conclusion to begin with, very simple conclusion, is that we have a lot of time building up a base of ones and twos, and then we explode into a larger degree wave 3 that is now unfolding at multiple wave degrees as we continue higher. So it's an extremely bullish count, but that's pretty effing obvious, isn't it, really? If we're talking about the biggest company in the world and it's up stupendous amount, a percentage increase, assuming I got the top there correctly. What did I say, 6,000 before? More like 160,000%, sorry, is more accurate. So an absolutely mind-blowing increase in an exponential growth asset. And I'm pretty sure, obviously, for anybody who is looking at it over any period of time, an increase in several 100%, several 1,000%, tens of thousands of percent, you'd be calling the top each and every single time, and you would have been wrong each and every single time. Okay, so there you go. That's looking at the basics of correction time and correction price, and looking at our moving averages, and that gives us a very rough idea of how we're going to construct the count. Okay, so the next thing I'm looking for is some kind of geometry to support the longer term idea, for the basic idea I've got for the count. It gives something to frame the market and help us explain it moving forward in time. So what I've got here is a pitchfork folder, and I've got GSC and cycle. GSC is Grand Super Cycle Pitchfork. Let's bring this up. So going off of the idea that this is the first major pivot here with an expansion in a new extreme, new price extreme with this swing high here. So this is the orthodox top, swing high and then down. We can see how very strong relationship here. In fact, what we're going to do is we'll work with the basic pitchfork and then we'll bring in the full pitchfork. But I think you can see quite clearly here that we've got test around the 61.8 golden zone, back test here. We channel between the 38.2 and the 61.8, pinging around it here. Then we get a move down and we back test the median line. We haven't got our pivot yet, but whenever we line up nicely with a median line before we put in the pivot, that's a nice sign to see as well. We can see we've got 1, 2, 3, 4, 5 hits of the median line here. Come back and trade between the 38.2 and the 61.8. We then rush to the 38.2, channel between that and the golden zone, hit the median line, head and shoulders around the median line, back test it, fall down, back test the 61.8, back test the 61.8, out of the pitchfork. Typical with an extension count to fall out of it as we build up the lower wave degrees, and then we come back above the 38.2, back test it to the pitchfork, to the median line, sorry, and back. Above the median line, back test it for support, fall back, through it, back up to it, and then we move from the median line to the 50 here. Now I'm pretty sure if at this point we put in our excuse me, I'm on the wrong tool. If we put in our full pitchfork to bring up that 23.6 level, you'll see a lot of channeling going on here as well. So there's those two tests excuse me, there's those two tests of the 23.6 there. There's one there, there's one there, there's a whole bunch of them there, testing the upside and the downside and the upside downside, 38.2, so on and so forth, 38.2 to the 23.6 again, and then the 23.6 again operating as multi-year multiple support, 38.2 acting as resistance, down towards the median line, back to the 38.2, back to 23.6, up to the golden ratio, test, 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 test again. So proving to be pretty stubborn resistance in the long-term move up here, but still a lot of room, depending on how we progress from here, a lot of room to go a lot higher. Okay, several times the current price potentially. Yes, you could have some pretty nasty corrections in the meantime. You could just march up from here. Either way, as you can see, when we take a step back and we look at the very long term, we can see how price is moving from this major first pivot going all the way back to 1987 through to 1998, to over 10 years. This 10-year corrective pivot has provided all of the framework for the geometry of the count to come, moving between Fibonacci levels based off of that pivot. And the pitchfork looks pretty tasty, to be absolutely honest with you, in terms of its accuracy, in terms of how well it's filling out price, just moving between all of those levels. So there you go. That helps give me confidence that this is all one giant wave degree that we're in, you know, and that's how Elliott Wave works after all. So now that we've got that, let's hide that out of the way. I've got a secondary pitchfork to support the idea again, which is this cycle wave pitchfork. This covers the shorter term within cycle wave degree, and here we can see very similarly again. I'm sure if we switch on the where is it, the full levels here, we can see once again moving very neatly between all the various levels of the golden zone, 38.2, golden zone, 38.2, median line, median line, median line, golden zone, 38.2, 38.2, 38.2, 38.2, median line resistance, median line resistance, median line resistance, 23.6, 23.6, median line resistance, 23.6, blah blah blah. You get it, right? You see how we move through these levels. Now look at this most recent price activity here, right? Going back a couple of years. Look at the 38.2 acting as acting as support. You see, it's 78.6 here, 78.6 here, resistance. Golden zone here, resistance, resistance. Okay, but 38.2, 38.2, 38.2, 38.2, 38.2, 38.2 support, horizontal support. So if you're there looking at the chart with it's all overlapping, you're like, what the hell is doing this? Why have we got this specific diagonal support going on? This is why. This is what's long term providing support. Backtest to 61.8, it breaks, fall through to the media line, backtest to 38.2, fall away from it. Right, so we're either marching back up 1-2 or we're being rejected and looking for lower support again. So as you can see, extremely strong geometry going on here between these different pitchforks. So that's the next thing I like to look at, and that seems to support the idea I'm going to present. So if you haven't figured it out yet, I'm sure a lot of you have. Let's just look at a few other things before we get into the actual count itself. Right, we've established time and price, we've established some geometry that we trust here as well. We can always add a little bit of extra geometry. I've taken the same pivot here and placed a parallel channel, assuming a 1-2, looking for 3, 4 and 5. Everything seems to fit quite snugly in there. The next thing I like to do is I want to look for support, essentially long time frame support. Now, I haven't labelled these because they're so far behind us. It's like if Aapl collapsed to $3, there's bigger problems in the world, isn't there? At the end of the day. So we've got some basic supports here which have been back tested. Now, I haven't bothered labelling the top ends resistance because it means having to colour them differently and use multiple lines. All it means is these have been back tested already, so they've been proven to be support. Resistance here, support, support, move forward. Break through prior resistance, back test it, support, support, move forward. Back. This is a minor support level, but it's all we needed to get support here. Break through it, retest the highs, test, 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 horizontal support, break through, back test it, support, break through, back test it, support, so on and so forth. So there's your long-term support levels. I like to have those on there because you never know what the future holds. If we would have an absolute collapse in price, we'd want to know on the longer time frame what we're looking for support. Medium time frame support, I've done that up here, MTF support I call that, and then we've got long term, that should really be medium term time frame demand zones. That's where we've come back and found buyers in the past and being supported by volume. I then put in my fixed range volume profiles over the shorter time. There's 3 of them here as well. I like to do that. One other thing I often include on the chart, we're just going to have to zoom in a little bit here so you can see, and we're going to have to come down to the day time frame. I include depth crosses on the 60 to 250 time frame because these things have a habit, not always, but on smaller wave degrees relative to the day time frame, like cycle degree and below, they tend to have a really good bet of predicting lows in the market. So 60 through the 250, depth cross, there's the low. Now, a lot of people have always looked at death crosses as bad news and tend to sell them, but it is often the worst thing you can do. You know, so or very close to. So if we move back again, here's another example of a death cross of a 60 through the 250. We can see this is literally the low. Alright, now like I said, not always applicable, and on larger time frames, larger wave degrees, on the daily time frame doesn't show up that often, but on smaller time frames it does tend to show up, and it's often a sign of a low coming into the market. Not always, you can't trust it 100%, you want to see an impulsive move back away from it, but it's just one of those things I like to look for. Okay, so now we've done basically everything we need to get underway, and so now I think it's time to, we won't bother with some of these other things, we'll just get into the account now then. Alright, so let's turn off the moving averages again, and let's zoom back out to the weekly. Right, and let's pop on what we got. So I'm working on a couple of ideas. I don't want to swamp you at the moment, so here's the simplified version of the count. We'll look at the more complex one in a moment. It's a massive bullish extension. Right. This is why we've got so many sharp corrections. Sharp correction, sharp correction, sharp correction, sharp correction, sharp correction, sharp correction in a row. There's no alternation between wave degrees here, so it looks very similar to some other exponential growth markets we've been looking at, doesn't it? Then we get some alternation moving forward in time. So what I'm suggesting is these are smaller, shrinking, similar corrections because they're all 1-2s. Okay, so it's an uber, super duper, uber bullish count over the long term, which I think geometry does support. It doesn't mean that we can't come down 30-40% from here. Okay, it's all relative to price. You understand? This could still be a huge correction that's about to unfold, but long term, when we take price all the way back to 11 cents, remember, we are still well within a long-term extension going higher. So Aapl, bright future ahead, potential huge opportunities in terms of future corrections to pick this thing up. We might be having one now, it might be over. So 1 2 1 2 1 2 1 2 1 2 1 2 3 4 5 3 4, so we're into the 3-4s now. Now the reason I suspect we're into the 3-4s is because the overlapping sharp corrections are completed, and now we're getting overlapping alternation with prior wave degrees, so we've got overlapping at this level now as well. So 3s and wave 4s tend to finish in prior wave degree 4s. So where this wave 4 finished, this wave 4 will finish. Where the next wave 4 finishes, will finish within this wave degree, and so on as we march our way higher. When we bring back our Grand Supercycle Pitchfork for a moment, and Cycle Pitchfork, we can see how this fits quite nicely. Each of these wave degrees marching higher over time, with plenty of room to move up. Now don't worry about these are not price predictions, these are just a labelling shift out of the way, so for God's sake don't start thinking that I'm predicting Grand Supercycle degree at 5 grand Aapl. Who knows, right? That's just shoved out of the way. You can see how, because of how much the chart gets skewed by log, that a move that looks tiny when we draw it, expanding these wave degrees into 3s and 4s, a move that looks relatively tiny could take price up another 600 odd % from where we are. Who knows? We also see that a fall from here just to the median line, from where we are in price currently, that could be a 55% collapse in price, and it still doesn't break any of the larger wave 1 and 2 pivots. So it may seem uber bullish, but remember, we're in log scale and things can correct brutally and still be part of a massive long-term bullish count. Right? Remember the scale of the corrections we looked at earlier. 35%, 39%, 45%, 61%, 83%. Okay, you get them. But the smaller they get over time suggests that the wave degrees are getting smaller over time. The corrections getting smaller in time itself suggests that the wave degrees are getting smaller. So that's a simplified count. This is now the LTF count. Let me just find where I put that. Sometimes your brain just completely falls out of your head. There it is, LFT extension count. So I fleshed it out to some degree. Grand Supercycle, Supercycle, Cycle, Primary, Intermediate, Minor, Minute, so on and so forth. And that's how I'm viewing the count over the long term. Let's just dress this up a little bit. Got a few little numbers overlapping. I like to be tidy. And then here we have 1 2 for the first time, 1 2 3 4. That's the first time we've seen that inside of the same wave degree, the extended 3. So we've gone 1 2 1 2 1 2, and now we're pushing into those 3-4s now. Right, and this is going to be a very long process because you've got 3 and 4 to come minor degree, could be over, could have further to go. Then you've got 3 4 at intermediate degree, 3 4 at primary degree, 3 4 at cycle degree, 3 4 at supercycle degree, 3 4 at grand supercycle degree, 5 at grand supercycle degree, millennial 1. If I live that long, who knows? I could be 50 years of price action ahead of us, couldn't it? Right, you just don't know. There's a lot of stuff to do. So a lot of overlapping to come in the chart over the next few years and decades, but a lot of big moves before we come back. So opportunities abound in terms of moves up and retracements. Now this could all be wrong. I will always hold my hand up and say that, and in a future video, once we come to consider other counts and we've gone through the other assets, we can talk about bearish ideas as well. Okay, but we're starting from scratch here. We're going with the count that fits best long term, and I would argue, given the evidence I've just presented, that this count fits best long term. So let's save the chart, and now let's go into a quick 10-minute analysis of the short-term price action and see what's going on here for you guys who are just interested in what's going on. So I will timestamp the video so you can just come, if that's all you care about, you can come straight to this. Let's come down to the daily time frame, and let's start that analysis now. Okay, so let's bring our count back up now. On the day time frame, we can't see any of the smaller details, so we're going to have to come down to a smaller time frame, and then this unlocks the smaller wave degree counts. Okay, so from the high that we've got back here, this is a -3. Now you might say that doesn't seem like the right time frame for a -3. Maybe when I started this whole process, I should have started with millennial rather than grand supercycle, and then this would now be a high wave degree at intermediate, but it's too late to go back and fix that now. I've done enough work as it is, so we're just going to have to live with it. Okay, the labeling, the exact time degree, wave degree, not a big deal. How it subdivides and how we explain it over time, that's the bigger deal. So that's what we're working with here currently. Let's just come down to the 4 hour actually, give ourselves a little bit more room. Let's bring up our volume, let's bring up our moving averages here for the moment. Actually, we won't bother on the 4 hour time frame. Let's bring up our volume profile. Well, let's have a look what we've got. So I think if I bring up fixed range volume profiles as well. Okay. And then local, what are we looking at? That's demand zone we came into, isn't it? So before we progress, actually, let's just have a look at this move up from 2020. Right, we can see how we got a larger demand zone down here in the volume profile. We moved up, we fell back, found buyers, moved up again to this level, fell back, found buyers, moved up, fell back, found buyers, moved up, fell back, found buyers. So all of this was where all this volume is here, and this was a series of lows where we found buyers onto the upside. So we basically came back to this demand zone, right, over the shorter time frame, fell back into it, found buyers again. If we look at medium time frame support as well, we can see that we've got previous highs, previous low, low here now, and previous highs here, previous highs here, previous highs here. So this is a strong support level at 137.98. We did break it, but we did put a bottom on it a couple of times first, and we back tested it on the way back up. We've got a lower support level here, which is these highs here for resistance, these highs here for resistance, these lows for support, this high for support, resistance, sorry, and this high for resistance, giving us 128.79. Support and resistance, although we label them as horizontal price levels, they are never perfectly horizontal. There's always a bit of give and take around them, but as you can see, came into a demand zone, corrected down, found support, right, tested that support, bounced very aggressively off of it. So going back to what I've been telling a lot of our members recently on the Patreon, given the volatility of markets lately, you don't turn your nose up at a reversal and wait for either your own bias to be confirmed or wait for what you suspect is happening to occur. I would argue you just take it when it comes. You know, if you're going to trade over short time periods and you get a signal as strong as this one was, you should probably just take it. Yes, it could be A, B, C, and not the dream 1, 2, 3, but you're going to have plenty of time to move your stop and secure profit on the way up, rather than screaming at everybody that it's still bearish. Because what if you're wrong? What if it's not? What if it's 1 and 2? So don't. Essentially, that's a different subject, but I've been leaning more in towards that kind of thinking lately because of the volatility we've been dealing with in the markets. You've got to be a bit more open-minded over taking short-term opportunities. So essentially, from the high, taking a volume profile of the high of this move down, we've moved back to resistance. So if we projected this point of control forward in time, this proved to be resistance. So let's bring up that. Medium time frame resistance, previous high. Like I said, it's not a perfect level, but it was these highs here roughly, and it was these highs here, and it's our point of control. So this is what we call supply, right? This area here, we came down, moved back up to a lower high, found sellers. Came down, moved back up to a higher high, found sellers. All around this area here, this is a little supply zone. But putting in what you could call, if we have bearish mindset for a minute, if we have pivoted again, you've got like a triple top going on here, right, which could be pretty bearish looking. But everything looks like that until you break it, doesn't it? It's just the way it is. So either way, that was a nice move up, and to have missed it would have been a shame, wouldn't it? So 176.24 is where I've got that resistance currently. So let's just go back with what we're doing. around this point of control, we know this is a established supply zone on the shorter time frame, so we're going to be looking for resistance and sellers here again if we come back up. Right, let's just save the chart there. So getting down from the high is the exact same count I have in the S&P. It's a zigzag ABC. I'd argue here on Aapl it's clearer. I really would. Let's just put this away in its own folder. Get it out of the way, lock it in place. And let's just turn off these FRVPs for a minute. So, as I've been saying in the SPY, I can't count that as 5, and I don't know how anybody manages it. Right? I see that as 3. So I see that as a W. Excuse me. I see this as 3. And this is quite a cool little X wave actually, because the C wave here needs to subdivide as either a combination ABC, 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 ABC for a sideways combination. But what we can do is break it down again. So let me show you what I mean. And move the B across here. Haven't quite made my mind up. I think I prefer that. So let's do that and say the B's here, and then we get 5 waves in a C. So 1, 2, 3, 4, 5. That's essentially the count I've got in the SPY. But you could break it into a bit of a cheekier X wave where you've got a zigzag, and then a flat, and it's ABC, 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 and it's a sideways combination. But either way, I think just A, B, C, flat pattern, expansive C here, expansive B, expanding flat, fits better. So we'll save a chart and stick with that. We'll put this in the folder. So W, expanding flat X, A, B, C, Y, done. W, X, Y, wave 4 complete at minor degree. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Subwave degrees breaking down in the 3. The 3 is longer than the 1, and the 5 in this case. And now we're correcting into what is either a completed A or a completed ABC. We could say A, B, C, and we're done. Right, 1 into 2. Bump, 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 and now we're going to march higher in a 3. Or we've just done the A wave of 5 waves down. Now if you were bearish, like I said, you could always be bearish. You could look at this as a larger pattern, right? You could say, well, if this is 3, what if this turns out to be 3 and then we come down? That's going to be possible as well. Okay, but we're going to stick with things like I always like to do until they get invalidated, and take opportunities on the shorter time frame as they come to us. Right, that's just the best I think we can do at the moment. So let's look at that from the low and run a fib up to here. Not quite even retraced to 50 yet. Alright, so let's work on an even smaller time frame. Let's bring in the fixed range volume profile for this move in this here. Big gap here, we filled that. Point of control from a longer term point of control here. 50 definite resistance and support level here. So let's put in a local support level there. We've got some volume. Let's say support. This may be enough. It may have been enough. 61.8 down here, getting some volume around the 61.8 support level, prior support here, here, around the 65. Point another level here. We'll gather all this up into smaller, into its own folders in a minute, and the 78.6 so on and so forth. So you could go A, B, C down into a 2, but it could be done just a little early. It seems quite shallow for a completed 2. So essentially invalidation point down here, invalidation, come back below here, it's not bullish. Alright, move back above the previous high, we've got confirmation of a pivot higher, right? So it's going to extend at that point, either likely towards parity if it's an ABC. So what do I mean? So let's say for a moment, take that, and let's say we come down to this, let's say that is the low. Breaking this high is confirmation that you have got a confirmed pivot here, but it's either A, B, C, right, or it's 1, 2, and we're going much higher in a 3. Okay, so we need to see that happen to have more confidence. So confidence above that level is still not a certainty, because longer term count and how it breaks down could screw with that. That's always a possibility, but positive move back above that resistance, back above that previous high. Invalidation below this level at 129.13. I'm just going to correct that to make sure it's right. 08, excuse me. 144.09, that's right. That needs to be 78 instead of 87. Brilliant. Now let's now have a look at our indicators, shall we? This is something I should have touched on earlier when I was going over the longer term count. I don't want to take up any more of your time now, but essentially we would have been looking for, with our long term breakdown for our moving averages and our long term breakdown in terms of our measurements, corrections and retracements, we would have been looking for oversold conditions at the major lows, perhaps looking for divergences on larger time frames such as the daily and the weekly, and helping that confirm our major swings on the way up. That goes without saying, it's something I should have probably included, but either way you get the idea. On the smaller time frame here, let's just come back to the daily because you want to get a sense of this. So far on the daily we've got a free swing pivot, right, free swing move, whereas this is all a bunch of overlapping stuff, right? So we can probably look at this as an impulse. That's how we've looked at it. You can't tell you, I'm not saying you can do Elliott Wave on the RSI, I'm just saying the momentum tends to reflect the way the waves move, and we see free into oversold, overbought to oversold. That could be 1 to 2 already, or it could be A, B back into neutral, C with divergence at the lows, and that would be A, B, C here on the chart, and that would give us confidence that we've gone overbought to oversold with bullish divergence. Off we go higher again, potentially. Right. These are all the possibilities. Bearish momentum has been slowing down. We haven't got a crossover yet on the signal for the average on the MACD, but it looks like it could be coming. Once again, that could be ABC, that could be 1, 2. OBV still trending down, although we have flatlined over the last few days while prices headed lower. So there is some divergence here on the OBV. There's some divergence, very minimal on the RSI. Okay, and let's now have a look at the weekly. Should we have a quick look at the weekly here? Just want to get a feel for what the volume's looking like at the moment, what the candlesticks are looking like on the weekly. So we closed with a bullish hammer last week. Not much push from volume on the weekly though, so that's not ideal. So could be A, right? Reversal in the B from the bullish hammer. C. Let's see if we get any follow through this week. Bullish engulfing candle would be nice, but we won't know until the week's close. On the daily, not a particularly strong push on the Friday close. Here, got this little spinning top. Is it? I can't quite see the candle. A little doji here. Neutral volume there. So we'll have to wait and see, but not a very strong push. So suspicion. My suspicion in the short term would be that yes, it's a low, but it's an A in an ABC lower, because we haven't really had the kind of volume coming at the bottom. But it could be done 1, 2. But I suspect A into B into C is more likely. Okay, so there you go, guys. We've got support levels at 150, spot 78, 144, spot 09. We've got the Fibonacci levels as well. Let's just bring that back onto the chart for the short term. 61.8 is at 145.30, 50 is at 150, spot 7. So it's basically the same support levels, right? 61.8, 65 is operating as structural support at 143, spot 89. It's all in this region. Right, so if we come back. With an ABC, then something like this is quite likely. Right, we'll have to wait and see if that's ABC. Break this previous high and it's not ABC. Invalidation for this to be a correction. Break this low. Invalidation for the bullish count completely. Can't be 1 into 2 if we go through that level. So let's just get those two sorted out. And we'll say short time frame publish. Invalidation. Lock well in place. Hide it out of the way. We don't need any. We'll leave all this as it is on the shorter time frame for the moment. We'll put these into short time frame support. Okay, take the fixed range volume profile. We'll put that back in the FRVPs for the moment. Save the chart. And I'm going to leave you there, guys. I hope you've enjoyed this introduction to Aapl on the channel. Like I said, we will consider other long-term counts in the future, but I want to get all of the other top 5 done first, explained to you in this way, and then once they've each got their own video, we can have a quick fire round each week and just say, right, half an hour video, 5 minutes per asset, bang, bang, bang. This is what I think of a short-term price action. And then if you want to look at the long-term price action, you've got the individual video for the asset to go back on the channel and have a look. And there you go. So if you're new to the channel, you like what you've seen, and you enjoyed it, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below letting us know what you feel. As always, a huge thank you to my Patreon subscribers. Your support is greatly appreciated, and I couldn't do this really without your help and without your support. So if you are interested in joining the Patreon and getting access to more material like this, which isn't available on YouTube, plus a whole bunch of other stuff, follow the link over to the Patreon, have a read of the descriptions of the different tiers, and if you want to sign up, feel free to sign up. It's an absolute bargain. And if you're not following me yet on Twitter, please do so. I do it to announce YouTube videos only. I'm not interested in tweeting anything, but it's just in case you miss your notification on YouTube. So, alright guys, take care of yourselves, all the best, and I'll be back with you shortly. Bye bye.